Hello and welcome to another portfolio update. Over the past week, the Couch Investing portfolio was down 2.15%, whereas the S&P 500 was down 1.6%. All in all, year to date, the portfolio is still up close to 5%, whereas the S&P is up 2.37%. And since the start of the portfolio, the portfolio is up 67.6%, whereas the S&P 500 is up 20.7%. So all in all, I'm quite happy with the performance. Of course, year to date, I have to thank the outperformance of companies like Alibaba and Uber. Of course, as you know, I entered 2025 with some contrarian trades, right? Uber got hit at the end of 2024 because, of fears that autonomous vehicles would destroy its business. I entered 2025 with a bet on Alibaba and Pinduoduo. I did concentrate and sell Pinduoduo to put it all into Alibaba. So far, that has been working out quite nicely. I'm up over 60% on Alibaba, I think just this year alone, which this year means in the last 2 months or so, which is great, which of course helps outperform the market. Now, of course, there are other stocks that are taking a hit year to date. We've seen the underperformance by the overall US markets, and we've seen the outperformance by European markets and especially China as well. Now, of course, the year barely started. We're 2 months in, still have 10 months left. A lot can change over those 10 months. But so far, it does seem like, going with some stocks that have not participated in the bull run that started already in 2023, it seems like that was an intelligent thing to do. Now, of course, I make mistakes. I'll continue to make mistakes. And so let's discuss the topic of mistakes in this video. And for that, I want to switch over to, the one and the only Warren Buffett, because Berkshire did post their 2024 report. And of course, they had to give us some wisdom, as always, and they talk about mistakes. And so let's jump into that topic. If you enjoy this type of videos, of course, hit the like and subscribe button. I would really appreciate that. So let's jump in. They start off by saying this: mistakes. Yes, we make them at Berkshire. Sometimes I've made mistakes in assessing the future economics of a business I've purchased for Berkshire, each a case of capital allocation gone wrong. That happens with both judgment about marketable securities. We view these as partial ownership of businesses and the 100% acquisitions of companies, such as a Geico, for example, right? This is the difference between a Geico and an Apple. An Apple, they don't own the whole company. So if they do see a mistake in Apple, which obviously they didn't, because that's still the number one position in the portfolio, has been for quite a long time, has been a successful one. But it's much more difficult to fix an issue like that, because what are you going to do? Force Apple to do a thing or two? No, you're not the majority shareholder, you don't own this. But for a Geico, a company that they do own, fixing an issue usually is much easier. They do talk a little bit more about that in the report. If you're interested in that, just write on Google Berkshire Hathaway report and you can read the whole thing. They continue by saying, at other times, I've made mistakes when assessing the abilities or fidelity of the managers Berkshire is hiring. The fidelity disappointments can hurt beyond their financial impact, a pain that can approach that of a failed marriage. It's funny because we did talk a little bit about, bad management when we talk about Block, previously known as Square, ticker symbol XYZ, previously SQ. We said a great business can be destroyed by bad management. And then I wanted to highlight this part: a decent batting average in personnel decision is all that can be hoped for. The cardinal sin is delaying the correction of mistakes, or what Charlie Munger called thumb sucking. Problems, he would tell me, cannot be wished away. They require action, however uncomfortable that may be. And this is extremely important. This is not just about, in this case, personnel decisions, but this is also about decisions of companies in your portfolio. Remember, it's a famous thing to say, right? The stock does not know that you own it, right? The stock does not know that you own it. The stock doesn't know that you sold it, etc., etc. When we buy stocks, when we build up the portfolio, of course, we all make mistakes. unless you're a grifter on social media and you only post your winners because you only win, then maybe you never make mistakes. But the normal person, the normal investor makes mistake. Me, Neil, couch investor, makes mistakes. It's normal. The thing here is that if you notice a mistake, if you notice that a company in your portfolio is not performing for a while, right? Because one quarter is not really a thesis breaker, but it's not performing for a while. You don't like management anymore. You don't trust them because they said A and they've done B, etc., etc. Even if you're down 10%, 20%, 30%, 50% on that position, sometimes, if not most of the times, the intelligent, the good thing to do is just cut your losses. That's what they say here. Problems, he would tell me, cannot be wished away. They require action, however uncomfortable that may be. It's not comfortable to see a position that is down 10 to 50% or so and tell yourself, actually, maybe I'll just keep it because I'm already down that much, right? I don't want to take that 50% hit. No, but sometimes you do. Sometimes you do have to take that 50% hit. I've done that with plenty of positions that I foolishly bought in 2021, in 2020, didn't sell at the top. Of course, you cannot time the top, but I didn't sell. These were trading at ridiculous valuations, and this was going down 10%, then 20, then 30, then 50. And I'm like, actually, what's the point? What's the point of keeping them? So I started to sell some, and then some that I kept because I was like, no, actually, maybe it is a good company, etc., etc. But then they went down even more. So I was down 60%, then 70% on some of these positions. And at one point, you're like, what's the point? What's the point of holding these things, right? I rather use the little money that was left from that position and put it in good companies. Because good companies, even they can be down a lot, as we've seen, right, in 2022. Metas, Amazon, Teslas, Nvidia, all of them have been down quite a lot, right? 50, 60%, maybe even 70%. But good companies do come back and go up way quicker than bad ones, especially bad ones with bad management. Now, you might ask yourself, does that mean that I sold a position in the public portfolio? Well, I did sell some shares. Yes, I did sell some shares. You probably already know which positions I'm talking about. I'll continue here. I have also been a director of large public companies at which mistakes or wrong were forbidden words at board meetings or analyst calls. That taboo implying managerial perfection always made me nervous, though at times there could be legal issues that make limited discussion advisable. We live in a very litigious society. And this is a part where you should shed a tear. I did. At 94, it won't be long before Greg Abel replaces me at CEO and will be writing the annual letters. Greg shares the Berkshire creed that a report is what Berkshire CEO annually owes to owners. And he also understands that if you start fooling your shareholders, you will soon believe your own baloney and be fooling yourself as well. Remember, just because we are talking about management executives of publicly traded companies does not make them gods. They are still human, and humans make mistakes no matter what. So I hope you enjoyed this little segment. I usually like to incorporate these types of things in the portfolio review and not just talk about, I sold 3 shares, I bought 5 shares, these are my positions, blah, blah, blah. I hope you learned something from these videos because, well, I learned this a couple of hours before doing the video, so I hope that you learned something from that as well. Now, going back to the portfolio. So what has changed? Well, other than the fact that Alibaba is now number 4 in the portfolio because it's up 66.5% for me already. So you see, I can make money from Chinese stocks. It is possible. I know, stop gloating. Let me have my time in the sun with this one, right? Anyways, SoFi still number 1, still up 81.7% on that. PayPal still number 2, up close to 25%. Very crucial next couple of days with the investor day. I think that's when the stock will start to make its move, hopefully on the way up. Then number 3 is Google Alphabet. That one, I'm up close to 14%. Alibaba, like I said, up 66.5%. Then Intel. Your eyes are not deceiving you. Intel number 5, and we're actually break even. At one point, I was actually up 1 or 2% or so, but now I am break even on Intel, believe it or not. After that, we have here Uber, still up 23%, even after the Friday red day, some weakness there. I'm still very, very bullish on Uber, and I think we're going to see, well, this is my personal belief, I think we're going to see Uber at $100 by the end of this year. Number 7 is Tesla, also up 87.2% for me. Then number 8, we have Rocket Lab. This stock has taken a hit just like other speculative stocks out there, although this is a bit less speculative than a lot of those other meme stocks that have gone up quite a lot in the last couple of months. Still up 444%. They'll report earnings in the next couple of days as well. Hopefully another good report, good comments on Neutron during the earnings call. If the stock goes down a little bit more, fine by me. I think I'll be adding if it goes under $20. Then we've got number 9 here, Micron, back under $100. Fine, still up 8% on that. dLocal up 26.5%. dLocal reports earnings on Thursday. I expect a good report. The stock will do what the stock will do. I've seen some crazy things with that one, up 20%, down 20%. So we'll see what happens. I still think I'll do quite well on that position. Cash here at 4.28%. Then we've got Meta up 55% on that one. Number 13 here is AMD. I'm already down 1.15%, not by much, only 2.87% of the portfolio. I continue to accumulate more shares when I see the price go down. Then we've got Disney, basically flat on that one. Transmedics, Upsellera, Celsius, and Owlet make up the last 4 positions of the portfolio. And you might have noticed that Transmedics and Celsius have become a little bit smaller, despite Celsius being up a significant amount on Friday. And that's because I did the following. First of all, I added another 75 shares to my SoFi position at $14.74. I'm sorry, but if the market keeps giving me those opportunities, I'll just accumulate more. I bought 10 extra shares of AMD. Yeah, I know, might not be a lot for some of you, but I think, I increased it by over $1,000 in that position, building my way up. Then I did sell shares, 30 shares, basically a 40% reduction in Transmedics for 8.77% gain at $78.33. I was in the green, so I took that opportunity to remove my exposure. I've been talking about maybe selling completely out of my position, and this is just me starting to do that. Then with Celsius, I took off 90 shares on Friday, so that's a reduction of 54.55% at $32 for a loss of 27%. Now you might ask, why did you sell 54.5% of your position and not 100%? Well, first of all, I took advantage of that huge jump in share price on Friday. I fully acknowledge that the quarter was not the best quarter. I think the acquisition does make sense, but just for me, I saw the stock jump a lot. I have a couple of positions now. This platform does not show you this, but where I buy my shares on eToro, you can basically select which position you want to sell. So it's not first in, first out or last in, first out type of things. I did buy shares at $30. I did buy shares at $32. And those are the positions that basically went out at a tiny, tiny profit. The rest is still a big loss, as you can see above. Now, the rest here remains to be seen. I still want to have a small exposure to that, but I wanted to increase my cash position a little bit more, especially after the hit that we've seen on Friday. So that's why I've added afterwards to SoFi and to AMD because, well, especially AMD, I want to increase that position a bit more and still have some cash left as well. I also did buy 6 extra shares of Google Alphabet at around $184. Yes, of course, the stock is down a little bit more. I don't care. I'll just keep accumulating more and more. So that's why you're seeing this new structure in the portfolio. Transmedics yet to report earnings. So if the stock will jump more on a good report, fine. The value of that position will probably go up. And depending on what happens with the other things here, maybe I'll close out Transmedics. Remains to be seen. Same with Celsius. I want to see what will happen in the future. But all in all, that's about it. I'm still quite happy with the performance of the portfolio. I'm happy with the positions in this one as well. So yeah, that's about it. I still have some cash left here. 4.28% of the portfolio sits in cash. So if we keep on seeing some red days, I have some cash left to accumulate and add to good companies that have taken a hit based on a macro. So that's about it. I'm not really looking to add a new position in the portfolio anytime soon. The last one was AMD, and I think it will stay at that unless I close out Celsius and Transmedics. We'll see what happens. Probably, I mean, in my head right now, what will happen is if I close both of them, it will just go in cash and stay in cash and see what happens. Will be added to other positions if they take a bigger hit, because I'm still not happy with the allocation for AMD. I think I can still grow my Micron position a bit more and maybe the Uber one as well. And of course, with the local, we'll see what happens on Thursday. If the quarter is a good one, but the market is short-sighted and it takes it back closer to $10, I will accumulate more there. Same with Rocket Lab. Currently not looking at opening up new positions. Like I said, I know I've been talking a lot about Evolution AB, Novo Nordisk. Yes, those are still high on the watch list, especially Evolution AB. I was very close to adding that, another, contrarian trade, maybe comeback position. We'll see what happens. So I'll keep you posted in those weekly videos, but all in all, that's about it. Mistakes happen. I think there was some good lessons to learn yet again from that Berkshire report. And this is basically what happens with the portfolio in the last week. So all in all, that's about it. If you enjoy this type of videos, hit the like button, subscribe if you're not, and I see you all in the next one. Bye-bye.